Friends, let us make a beginning with the discussion on previous examination questions in the topic of tax deduction at source. See, already we completed the discussion on different provisions of TDS. Earlier also I made the point very clear where the paper revolves around. It revolves around 194C contractual payments, 194I, 194J on rent and on professional and technical services. Now and then the questions can also come on your TDS on salaries and all. Other way around, we have here about 15 questions to discuss on TDS provisions. You can just observe how what is the reality behind our saying that the whole discussion revolves around that. Now I read the May 2011 question. Maya Bank credited 73 lakhs 50,000 towards the interest due on time deposits in a separate account for a macro monitoring only by using a core branch banking system solutions. No tax was deducted at source in respect of the interest on deposits so credited even where the interest payable in respect of some deposits exceeded 10,000. The assessing officer disallowed the entire interest expenditure where the interest due on time deposits credited exceeds the limit of 10,000 and also levied a penalty under section 271C. Decide the correctness of the action of the assessing officer. Of course, friends, these type of the questions will come only in a situation where a specific circular comes, or in that particular year this is the major issue in either the judicial judgments or the circulars issued or the amendments. In my discussion in case laws and amendments also earlier I discussed on this point. Let me give the clarity on this. Many of you might have gone for the bank audits. You might have seen the core banking solutions. In a bank, what will happen? Interest calculation on a day-to-day also happens. And for a monitoring purpose, to make a provision, that is in order to recognize the income on accrual basis, what they are doing periodically, that amount of accrued interest they are going to keep in a particular account as a matter of income recognition. But then your TDS provision and the way the bank makes the accounting, what we are saying is, in case if the bank is calculating the interest on a daily basis, it does not mean that you have to deduct the tax at source on such credits which are happening on a day-to-day basis. Because the provisions of the TDS with respect to the interest, what is stated, that is when it is credited, that is when interest becomes due on the deposit or when the payment whichever is earlier. If that is the case, you go by the what provision says rather than what your core banking solution system says. So in case of the banks, the need to deduct the tax at source comes based on what is it, that what is stated in that deposit when it is going to become a due for the payment. Is it interest is a monthly or quarterly or half yearly or once in a year? On the basis of that due date, you are supposed to decide about deducting the tax at source, not on bank for its monitoring purpose and for its what is it expenditure recognition purpose, how it is going to do. that interest calculation on deposits is not the criteria. So write down the point. Point is, assessing officer cannot disallow on the pretext that TDS is not deducted or a tax is not deducted on the interest credited by core banking solution CBS software. Then banks need to deduct the tax on accrual of the interest at the end of the financial year, or at periodic intervals, as per the practice of the bank, or are as per the depositors requirement, or are on maturity, or are on encashment of time deposit, whichever event takes place earlier. This is what your 194A requirement. So this is clarified by the circular issued by the Central Board of Direct Taxes. Then I move to the next question, friends. May 2010 new syllabus. There are 3 bits. Of course, bit after the bit we will read the bit and then discuss on the the solution part of it. Max Limited pays rupees 1 lakh to Mini Limited, a resident contractor who under the contract dated 15th October 2011 manufactures the products according to the specification of the Max Limited by using the material purchased from the Max Limited. See, point here is we studied section 194C. What constitutes a works contract? That is, the contractor need to purchase the material from the contractee, and on that material he is doing the job and transferring the whole to the contractee. In another situation, if somebody without using the material from the the person who gave the work, do the work and transfer the property in that particular work to the other person, it is not something works contract, it is something sale of a transaction, sale of goods transaction. So only when it is a works contract, 194C provisions comes into play. Earlier also we discussed this particular point. You have to be very careful. For you to bring the things into 194C, material need to be purchased from the contractee. On that material, the contractor is going to do something. If the material is purchased from somebody else and on that work is done and it is being given to the, the contractee, then it will not attract 194C is what we have understood. So write down the point, that is, as per the provisions of section 194C, tax is to be deducted at source at 1% or 2%. Under what circumstances 1%, friends? Individual and HUF. Other than that, if the payee happens to be other than individual and HUF, you need to deduct the tax. Payer need to deduct the tax at a 2%. Then the definition of the work includes manufacturing or supplying a product, manufacturing or supplying a product according to the requirements or specification of a customer, by using material purchased from such customer, Next, 194C does not cover manufacturing or supplying a product in accordance with or in accordance to the requirement or specification of a customer by using materials purchased from the person other than such customer. Now the concept following that is what, friends? Okay, if materials are purchased from the contractee, then it comes under the works contract. If materials are not purchased from the contractee, it is not coming under the works contract. Only when it is works contract, the question of TDS comes into play. It is works contract only, you purchase the material. On that you did the job and you are giving back the things to the contractee. Now, is it on the whole bill or is it only on the part of the your charges for carrying out that particular job? The answer for that is, friends, if the bill clearly specifies and gives bifurcation as to what is towards material and what is towards the job, then it is only on the job. But if it is a consolidated bill where bifurcation is not there, on the entire amount of the bill, you have to deduct the tax at source. So, love to write, that is, tax shall be deducted at source. Next point, tax shall be deducted at source on the invoice value, excluding the value of material, if such value is mentioned separately, Next, friends, I move to the next bit. In this whole discussion on previous examination questions, my idea is only to tell you the approach to the solution, not the solution. Okay. So, a company operates television channels, makes payment of 5 lakhs to a former cricketer for making running commentary of one-day cricket match. See, if the payment is made to the commentator, provisions of which section do apply? See, this commentator comes under the professional service. 194J comes into play. So, once 194J comes into play, what is the TDS rate? 10%. Write down. Under section 194J, tax is to be deducted on fee for professional services. If it exceeds 30,000, at 10%, and then CBDT notified that commentators as a professional under section 194J. Then another question, friends. Of course, this concept we have already studied. There is a foreign company and there is an employee for that foreign company. It deputes that particular employee to its Indian counterpart, and that employee is getting salary from the Indian counterpart for the services that he has rendered in India. He is also getting a salary from that particular foreign company. But then the question is, the Indian counterpart, while deducting the tax at source on salary, do they need to consider the salary in India as well as salary outside India also? The answer for that is both, but for saying that both, you need to understand the point that it is to be well ascertained, established, proved that although he gets a salary from the foreign employer, no services are carried out during the financial year outside India. That fellow came to India and rendered services only in India. For his services rendered in India, both Indian company is paying and foreign company is paying. Then while deducting the tax at a source, the employer need to consider both Indian income as well as the foreign income. At some other point while discussing the case laws, I made this particular point to be written, so I am not troubling you by asking you to write at this juncture. Now let me get into the May 2010 question. Bharati Cements Limited and SSC purchased jute bags from whom? Rajkumar and Company. The latter has to supply the jute bags with a logo and address of the SSC printed on it. From 1/9/2011 to 20th/3/2012, the value of the jute bag supplied is 8 lakhs, for which the invoice has been raised on 20th/3/2012. While effecting the payment for the same, is the SSC bound to deduct the tax at source? Assuming that the value of the printing component involved is 60,000, you are informed that the SC has not sold any material to the Rajkumar and Company, and that is the latter has to manufacture the jute bags in its plant using the raw material purchased by it from the outsiders. See, point of interest here is what? There is one company which purchases jute bags from others. Bharati Limited purchases from Rajkumar the jute bags on which Bharati Limited logo is being printed. Now Rajkumar, what he is doing? He is purchasing the raw material from others, and on that he prints it and supplies the same to the Bharati Limited. So this will not come under the works contract, because it is not Bharati Limited which is supplying the material to the Rajkumar. Rajkumar independently purchases the material from others and is printing the logo of Bharati Limited and supplying it to the Bharati Limited. This cannot come under the works contract, so there is no need for deducting the tax at a source is a point. So this point already we have discussed. I also made you to write, so I am not asking you to again redo the things. But let me tell you friends, reading the question should be pakka. At the final level, what is most important is you have to understand the transactional flow. That comes only when you do the articles. Because to carry out an audit, unless you know the transactional flow of that organization, virtually it is not possible for us to carry out an effective audit. So that improvises the patience. That patience will be useful for reading the questions. Now to do the articles, let me come back to the point. That is November 2009 question. Mahanadi Limited has taken 3000 square foot of the flat on rent from Yamuna Limited to set up its branch office. The rent payable to Yamuna for the flats is 60,000 per month plus applicable service tax. Mahanadi Limited wishes to know whether tax is required to be deducted at source under section 194I on the gross amount of the rent including the service tax. This point also I discussed in the case laws. Peculiar difference you notice, in 194I rent, commercial properties, as all you are aware, service tax obligations are there. Even on rent, service tax is required to be paid. So now TDS, when you need to deduct the TDS, see, landlord gives you a bill. This is the rent, this is the service tax. This is the TDS. That TDS, is it only on the rent portion or including the service tax? If it is a professional payment, yes. Let us suppose chartered accountant, as a chartered accountant, I did concurrent audit for a bank. Then what is the fees? add service tax, on the sum total you deduct the TDS, whereas that is not the case with respect to the rent. In case of the rent, clearly a circular is being issued by the Central Board of Direct Taxes stating that TDS is to be deducted only on rent portion and not on the service tax portion. Write down the point. That is, service tax paid by the tenant, service tax paid by the tenant does not partake the nature of the income of the landlord, therefore TDS is only to be made on rent portion, without including service tax. But friends, again and again let me remind you, this is not the principle with respect to the your professional payments 194J. Including service tax, you are going to deduct the tax at source. CBDT is kind enough towards the the landlords. Then friends, I move to the November 2009 old syllabus. X, while making a payment to a non-resident for providing technical services on a World Bank aided project, net of tax has deducted the tax as per the rates prescribed, but says that payee is not entitled for the TDS certificate since tax was not borne by the payee as per the agreement. Sometimes क्या होगा, मेहरबानी से क्या बताते हम, we give you tax free income. कैसा? Tax obligations हम भर लेते. You told like that and you paid the tax on what you are paying to a non-resident. Now that non-resident fellow says, sir, will you give me the TDS certificate? Why? It is not out of your income we deducted the tax at source. We paid the tax, why we have to give you the TDS certificate? फिर भी देना ही पड़ेगा. Whether you are deducting from his income or मेहरबानी से आप उसका टैक्स फ्री इनकम देके टैक्स आप भरे से तो भी उसका टीडीएस सर्टिफिकेट देना ही पड़ेगा. लिख लो. That is, even if tax is paid by the payer, even if the tax is paid by the payer out of his own pocket, TDS certificate shall be issued to tenant, is to be issued to pay recipient, or other way around, issued to recipient. Then friends, I move to May 2009 new syllabus. Of course, I am not reading the question, keeping the time factor. Warehousing charges के ऊपर TDS लगाना नहीं लगाना, वो चीज है. See, what the name you give for somebody allowing to use a particular earmarked place, it will attract the TDS provisions. So write down, warehousing charges of course. Point of interest here is, in the warehouse a specific place is not allocated to you. In that cold storage you don't have the specific place. They will say you give your material, we will keep it according to our own listing. Then your rent, it will not come under the rent, but it comes under the contract. It will not go to 194I, it goes to 194C. Because the simple point here is, for it to come under 194I, earmarked space must be given to you. Right. So write down, warehousing charges amounts to rent for the purpose of section 194I. When I say this, specific place is given, then 194I comes into play. Cold storage charges we discussed, 194C. That is, therefore the company was under an obligation, to deduct the TDS under section 194I, and not under section 194C, Then friends, May 2009 question, this also I am not reading. East Bengal club, a renowned football club, is paying 6 lakhs annually to a coach, and your 194J says what? Professionals include coaches and trainers. So even that payment will get attracted to 194J is the point. Write down friends. That is payments to the coaches and trainers in relation to the sports activities, is to be treated as a professional service, and TDS is to be deducted at 10% under section 194G. Then I move to the November 2008 question, friends. P Limited is engaged in manufacturing of a product. It paid a lump sum deposit and obtained 50 mobile phone services so that employees of the SSC can be contacted immediately. The company paid 45,000 every month towards the services and call charges to the mobile franchisee. On the facts that whether P Limited has to deduct the tax at source on payment, if so, under which provisions of the Act. That is, this comes under the contract service. 194C is the point. That is, we are taking 45 mobiles from the franchisee of a telecommunication services. Now these mobiles are given to our employees so that they can be contacted very easily. Now every month I am making the payment to the franchisee of the telecommunication services. So this payment comes under which section? Under the 194C contracts. Then next question is, R Limited paid 5 lakhs as a sales commission to Mr. Francis, a non-resident who acted as an agent for booking the orders from various customers who are outside India. The SE has not deducted the tax at source. What is it? Will the commission get into the provisions of what is it? Your TDS. First, one important thing is, whenever you make the payment to a non-resident without deducting the tax at the source, in case if you are going to what is it, make the payment of royalty, fees for technical services or other sums chargeable under the act, then that expenditure gets disallowed. Now the point of interest here is this income is a taxable income for the recipient? If an income happens to be taxable income for the recipient, then TDS provisions comes into play. If this income is a foreign income for the, what is it, that particular person, then see, there is a person who is outside India. A company, an Indian company entered into an agreement with that particular person. You find out the persons who are interested to take our products. We will give you the commission. Agreement is entered in foreign country. Services are also rendered from foreign country. Amount is also going to be received in foreign country. That fellow is a non-resident. So if it happens to be a foreign income which is not taxable in India, then there is no need for deducting the tax at a source, is a point to be well understood. So this point also, keeping the time factor, I am not making you to write or note down the point, because these type of questions in those years, because that respective situation is being decided in a particular case law or a circular is being issued, then only it becomes important. But other way around, this remembering this concept can happen with the listening also. Point before I get into the next question is, point which we have studied is, payments to the non-residents, you need to deduct the tax at source provided such a income is going to be taxable in India. As long as that is not the case, without deducting the TDS at source, you can make the payment. Now friends, I move to the next question. What is that next question is, ABC Limited took on sublease a building from J, an individual, with effect from 1/11/2011 on a rent of 30,000 per month. 1/11/2011 means how many months? 11th month, 12th month, 1st, 2nd, 3rd. 5 months into 30,000 is how much? 1,50,000. Only when the rent exceeds 1,80,000, TDS 194I provisions comes into play. But while developing the answer, you are supposed to write what 194I says. 194I, any person not being an individual in HUF who is responsible for paying to a resident any income in the form of rent shall be at the time of credit of such income to the account of the payee, or at the time of the payment in cash or by issue of a check or by any other mode, whichever is earlier, need to deduct the tax at source. At what percentage? 2% for the use of machinery and plant and equipment, and 1% for use of land and a building. But however, only when the payment is exceeding 1,80,000. So when I say rent, rent means by whatever you name called, lease or sublease or tenancy or any other, for use of land, building, land appurtenant to the building, machinery, plant, equipment, furniture and fittings. So there is no much great aspect here, except you make a note of gist points of 194I, write down section 194I, that is rates of TDS, 2% for use of any machinery or plant, use of any machinery or plant or equipment Then B is 10% for use of any land, 10% for use of any land or building, brackets, including factory building, or land appertinent to the building or furniture and fittings. That is threshold limit. What is threshold limit? That is the above provision is applicable. The above provision is applicable only when the amount exceeds, rupees 1,80,000. Only when the amount exceeds rupees 1,80,000. I move to the next question. Of course, May 2005 we have 3 bits. Bit after the bit we will discuss. X Limited, the employer credited the salary due for the financial year 2011 and 12 2,40,000 to the account of the Q, the employee, in its books of accounts on March 31st 2012. Q has not furnished any information about his income or the loss from any other head, and a proof of investments qualifying for deduction under section 80C he has not given. Now in this situation, what is the obligation? See, basically tax is to be deducted at the time of payment of salary and not when salary is credited to the account of the employee in the books of accounts of the employer. Of course, that fellow don't specify information regarding the loss from house property or what is it, his investment details and all. If it is not given, without giving due consideration for that only, you are going to deduct the tax at source. But the point of learning is salary TDS differs from other TDS, because in all other cases TDS is to be deducted either at the time when the amount is credited to the account or on payment, whichever is earlier. But with respect to the salary, the noteworthy point is TDS is to be deducted at the time of payment of the salary and not when salary is credited to the account of the employee in the books of accounts. This is one point I expect you to write down. That is, tax is to be deducted only at the time of payment of salary, only at the time of payment of salary, and not when salary is credited to the account, not when salary is credited to the account of the employer, to the account of the employer. Then the next question, why an individual whose total sales in the business during the year ending on March 31st 2011 was 1.2 crores, rupees 9 lakhs, paid 9 lakhs by check on January 1st 2012 to a contractor for construction of his business premises in full and a final settlement. No amount was credited earlier to the account of the contractor in the books of the Y. See, point of interest is here, who is the payer? Payer is individual, and what is his total sales? 1.2 crores. Then he is subjected to the tax audit under section 44AB. So 194C provisions do applicable to the person who is subjected to the tax audit. Once that person is subjected to the tax audit, then in case if he is making any contractual payments, definitely what will happen, that is a tax is to be deducted at a source. So what is the point that you need to write down? In case of individual who is subjected to the tax audit under section 44AB, in case of individual who is subjected to the tax audit under section 44AB, is liable to deduct the tax at source, is liable to deduct the tax at a source in respect of contractual payments covered under section 194C. See, another beautiful question or bit. X Limited credited 28,000 towards the fees for professional services, 22,000 towards the fees for technical services, then is the TDS is to be deducted. See, put together it is exceeding 30,000. When you sit in the exam, then all this struggle comes. Today when the solution is before us, there is no much of a problem. Try to understand professional services and technical services both are covered by 194C. But iska ye matlab nahi, put together if it is exceeding 30,000 rupees, you have to deduct the tax at source is not the point. If it is a separate, that professional services are separate and technical services are separate, individually it should exceed 30,000 rupees is what the point. So write down the important point. No deduction under section 194J need to be made where the amount of aggregate amount of payment for professional and technical services exceeds 30,000. That is only when individually the amount for professional service and the amount for technical service exceeds threshold limit of 30,000, TDS is to be deducted at source. Tax is to be deducted at source. Then friends, we have November 2001 question. There are 5 bits. X, an employee of a central government, receives arrears of salary for earlier 3 years. He inquires whether he is liable for deduction of tax on the entire amount. Point here is, just now we have studied in case of the salary income, TDS is to be deducted on payment basis, not on accrual basis. However, he is entitled for 89(1) relief. So definitely TDS concept comes. TV channel is paying to a winner of a quiz program. We have already studied 194B. That is 30% of TDS is to be deducted at source. Then State Bank of India pays 50,000 per month as a rent to the central government for a building in which its branch office is there. If the payment is to the central government, there is no need for deducting the tax at source. Will you make the point noted? Write down. That is, as per section 196, there is no requirement to deduct the tax at a source. If payee is the government, Then friends, a television company is paying 50,000 to the cameraman for shooting the documentary film. Will it come under the professional services? Definitely it comes under the professional services, because professions as defined under section 44 AA, what it says, cameraman is treated as a professional, so accordingly the professional services will be subjected to the TDS. Then that is a state government pays 40,000 as a commission to one of its agent on sale of lottery tickets. 194 BB comes into play. Payer shall deduct the tax at 194 G comes into play, and on such commission 10% is to be deducted at source. And a turf club awards a jackpot of 5 lakhs, then 194 BB comes into play and TDS is to be deducted at source. I am not making you to write all these things because there is no much here. Already you have studied those sections, just remembering that section and the rate of tax. Other than 194C, 194I, 194J, you remember in respect of the remaining sections, what is section, what is the payment, what is the rate of TDS. If you remember, you will be able to well answer these type of questions. Then I move to the May 2000 question, friends. The first question is what? A lottery ticket, winnings from lotteries. Here also I don't have much to explain. Under 194B, 30% TDS is to be deducted as a point. Private trust, that is, has 2 individuals and 1 HUF beneficiaries and their shares are equal. The trust borrowed certain amounts on which interest it is paying. See, point here is interest other than interest on securities covered by section 194A says what? A private discretionary trust has to be assessed in the status of the individual, and accordingly for individual your 194A is not applicable unless and otherwise such an individual is subjected to the tax audit under section 44AB. So since private trust is being taxed at the same level as that of the individual, so TDS provisions are not coming into play in respect of the interest paid is a point. Then friends, quickly to move to the another question, that is November 1998. These are all good olden days when we passed our exam. Of course I got qualified in 97. This question is of November 1998. In those days, in this particular topic, complex points are not there. We are all only bothered to do what? Remember the section at the rate of tax. Enough. But 15 years passed down the line, when I am looking at the TDS, definitely the kind of the questions now coming really demands lot of observation of that particular provision. Now, of course, the amount of salary that today an young chartered accountant is getting is definitely not 10,000 as what in 97. Today it is 60,000 per month minimum. So definitely expectations are also getting increased with increase in the salaries. Okay, see, today mechanization and all, earlier one chartered accountant is there in the employment means there used to be 30 people waiting for his guidance. You know, there is a very big department where he is heading the department. So many servants and sub-servants. Today, yes, in those days chartered accountant used to get only 10,000 rupees, but number of people reporting to him are more. Today, you are going to get 1 lakh rupees per month, but you and your computer and one assistant. In sometimes that one assistant is also not there. Right, because that is how we have brought the whole environment into. Because of computerization, everywhere people says reduction of the cost, no assistants, do for yourself. cost reduction program. चलो back to the point दोस्तों, पहले पढ़ो बाद में life, complete life is yours. CA qualification east and west, CA is the best. What about south and north, you don't ask. Okay, right, because always when I inspire the students to do CA course, I always say that is decade after decade one or the other profession will have the importance, but right from 60 years always this is having a relevance. As long as the sun is there, money will be there, not SUN. As long as money is there, you definitely, your relevance will not go. Any amount of computerization will not take away the relevance of a chartered accountant. Coming back to the point dosto, so since you are aiming for a bigger thing, more than IAS, okay, IAS will have a retirement, CA will not have a retirement. You can earn even for your funeral. Now back to the point, that is an Indian company pays a dividend on a preference shares to a shareholders of the amount of 10,000 on September 30th, 2011. What is it? Dividends are paid. Will the tax is to be deducted source? Dividends are getting exempted under section 10 clause 34 because company is paying the dividend distribution tax under section 115(o). Consequently, there is no need for deducting the tax at a source. Second part of the question is, foreign enterprise enters into a contract for fabrication and supply of components to the Indian firm and in turn subcontracts the work to the Y&T company and pays 20 lakhs. So contracts and subcontracts put together are coming under section 194C. So even if it is a subcontract, TDS is to be deducted. Then the third question is, a company pays to a doctor a monthly retainership of 2,000 for attending an outpatient clinic. Under section 194J, the amount exceeding 30, only if it exceeds 30,000, 2,000 per month to a doctor means 24,000 per annum, no TDS. That is what I am saying. These are the good olden days questions where we are asked to just remember the section, payment, rate, threshold limit. That's enough. Then under the agreement entered into after June 1st, 2003 between Indian company and the foreign company approved by the central government, the tax on royalty payable by the former to the latter is paid by the Indian company. See, all this, why I am fastly reading the question is answer solution we want to concentrate more. At that point of explaining the solution, I am also equally explaining the problem. Try to understand friends, payment to a non-resident, as long as that payment is going to have a taxation aspect, taxability in India, unless you deduct the tax at source and make the payment, such expenditure gets disallowed. Section 195 clearly states that in case of royalty, fees for technical services when paid to the non-resident gets attracted to the TDS provisions. Then a non-resident Indian acquires 10,000 units of the UTI. UTI declares a dividend. Then will it get attracted to the income from the units of the unit trust of India gets exempted under 10 clause 35. Once the income gets exempted, there is no need to deduct the tax at source. Then friends, I move to the next question given in November 1996. Here friends, I am not getting into the greater details of the question. This question is based on 194J. Advance fees is paid and balance fees is also paid, and amount is paid towards the expenses, reimbursement of expenses also. When it is a case of a professional payments, please do remember, as long as in the bill separately the towards expenditure and towards the fees clear demarcation is there, there is no need to deduct the tax at source on reimbursement of expenses. Only on professional fees you have to deduct the tax at source, of course, including service tax. Okay, on reimbursement of expenditure, there is no need to deduct the tax at a source. Then friends, the last question in this particular topic is May 1996 question. This question also I love not to read. The point here is it is on 194I. Again let me revise 194I. What is 194I? TDS on rent. Provided that rent exceeds 1,80,000. You can give any nomenclature, arrears of rent, or rent for furniture, non-refundable deposit, whatever the name that you give, that all that will be put together. On that you have to deduct the tax at source. So on arrears of rent, TDS is to be deducted. On rent you have to deduct the TDS. Furniture and hire charges are levied for giving the accommodation, furnished accommodation. Even payment for letting out the furniture also gets attracted to 194I, and non-refundable deposit also attracts the provisions of section 194I. Hope we revised and you got the gist of the points, and hope this discussion might have improved the confidence with which you can face the problems on TDS. Thank you.